But right now, joining us is back to our earnings corner, ZEE Entertainment, which came out with its numbers in line with what the street was estimating. Atul Das, who is the Chief Strategy Officer at ZEE Entertainment, joined us now. Hi, thanks so much for joining us. First, could you walk us through your performance in Q1 and the key highlights?
For the first quarter of fiscal 2013, ZEE has declared its numbers, and if you look at the total consolidated operating revenues, we have seen it grow by 21% YOY to 8.43 billion rupees. If we talk about our components of our revenue growth, then both our big streams of revenue, whether it's advertising or subscription, have grown very, very substantially. Advertising revenues have grown by 18% YOY to 4.47 billion rupees during the quarter, and subscription revenues have grown by 19% YOY to go to 3.64 billion rupees during the quarter. So it has been a very, very encouraging and a very robust revenue performance for ZEE Entertainment during the quarter ended June 30th, 2012. And if you consider the fact that the economy has been going through a slowdown phase, and given the context of the economic environment, I think the growth has been really, really good. And even from an advertising revenue perspective, we believe that the growth in the market has not been so strong. And because of superlative performance of ZEE and its channels across the genres where our market shares have grown, we've been able to show such a nice and interesting growth of 18% YOY. Coming to the margins, if you look at our EBITDA margins, they are at 27.7% level for the quarter, and the margins are at 2.33 billion rupees. And that's also very encouraging because we have increased or improved our margins relative to the fourth quarter of fiscal 12 that we declared just a quarter back. And that has also come about because of our growth in market share across the board. If we look at some of the segments in our revenue growth, then one of the segments where we've not been making money is sports. There also we have seen some improvement as far as reduction in losses is concerned. Our losses in the sports business for this quarter is only 21 crores. And across the board, performance improvement has been there as far as our revenue and GRP shares are concerned. So that's the highlight of the performance of the first quarter.
Right, Atul, so the first quarter has been pretty good, but what kind of guidance are you now giving for the coming quarters?
Well, we don't give specific guidance for our businesses, but this year we are investing in our content, and as we've seen relative to last year, we've increased the overall number of hours of programming. We've just launched a few more shows in the last 1 or 2 months. All of these shows have been very well received by our consumers and viewers, and therefore we are very confident that our business is doing relatively better than, and I think, most of the other participants in the industry. There is some weakness as far as overall ad spend growth is concerned. So we may not be looking at a very, very substantial growth this year. Of course, these trends keep changing, but our expectation is that advertising revenue growth for the industry would be within the region of 8 to 10% in fiscal 13. And if we continue to do well on the market share front, ZEE should be managing to do a little better than that, as you have already seen in the first quarter performance.
How has digitization impacted the business?
So digitization is obviously going to be very positive for the entire industry, and so is it for ZEE. We believe that it will improve the dynamics of the industry and very positively for the broadcasters, because it will redistribute revenues in the rightful manner. It is also very good for the consumers because they get to choose the channels of their choice. They get much better quality of reception of audio and video. And of course, they can control their pricing power in terms of whether they want to go in for the highest packages or they want to go in for lower packages. Also, they can consume, high definition content. We have been increasingly offering our contents in high definition format. So, net impact of that will be that our revenues will definitely get a boost, which may come with some, lag, because this year being the first year of the step of digitization, where the first 4 metros are actually going digital as per the current regulation by end of October 2012. So, and the next phase, of course, covers 38 cities, which should go for digital space in the next 6 months after that. So it's a very positive development, and it will positively impact revenues both on the cable side as well as on the DTH side, because we believe that a good part of these digital homes would be taken by both cable as well as digital DTH operators.
Atul, can you also take us through what the exceptional items and the other income look like during this quarter?
In fact, there is no exceptional item this quarter. It's just the other sales and services, which reflects our revenues that we get from sources other than subscription and advertising. So we do have syndication of content on our businesses, and that reflects as other sales. There is no exceptional item reported during this quarter.
All right, just the last word on your sports business. That's the one which used to be under pressure and making losses. How has it performed in this quarter? And if you could take us through the outlook for the sports business going forward.
See, sports business is something that is still negative for ZEE, and we are obviously seeing improvement every year. So if you look at FY11, our losses were far higher. In FY12, we have seen those losses come down, and what we believe is that in FY13, which is the current fiscal we are in, we should see those losses coming down substantially. Now, if you look at the first quarter performance, our sports business has delivered revenues of about 922 million rupees and a loss of 210 million rupees. So there is a loss there, but as I told you earlier, we do expect losses to substantially reduce over the last year, and our performance continues to improve on the back of our steady growth in subscription revenues, as well as with the push that digitization will bring, our revenue profile in the sports business should definitely improve quite substantially.
Right, Atul, all the best, and thanks very much for joining us. That's all the time we have on Closing Bell as well. So thanks so much for watching. After the bell is up next.